5 mistakes we make when applying for business credit. That's today's topic, and let's dive into it. Hello everyone, and welcome back to another episode at NOVARISE Invest. For those who are tuning in for the first time, well, let me tell you, this is your channel for real estate education. And today's topic will be all about business credit. Why is it that we care so much about business credit? Well, a couple of reasons. The first one, business credit doesn't appear in your personal profile. So you can accumulate that, use it to expand your business, use it to expand your real estate portfolio, and you don't have to worry about your personal FICO score being negatively impacted because of that debt. And additionally, aside from the benefits of the FICO score, business credit usually tends to be approved for more. Why? Because you're no longer capped at your personal income. In fact, business credit is actually based on the amount of money that you generate in your business or in your real estate portfolio. And because your business typically generates more money than you as an individual, it will get you approved for more money. But if you were to do certain things yourself, or let's say if you were to apply for business credit without being educated in the subject, you will automatically get yourself and your application denied. But don't worry, that won't happen to you, because that's why you're tuning in to this episode today, to our channel. And for that, what we did is to invite Mike Banks from Fund and Grow, and he will come here and educate all of us about the topic of business credit. For those who have been following NOVARISE for quite some time, you are probably familiar with what Fund and Grow does. But for those who are not so sure about what Fund and Grow does, they're basically a done-for-you company that will help you build business credit and get access to business credit, so that way you can get access to liquidity and use that money and invest in your real estate portfolio or any other business that you have. And so without further ado, we're actually very excited, and let's welcome Mike Banks. And as promised, here we are with Mike Banks. Mike, welcome once again to NOVARISE.
Thank you so much for having me today, Lucilia.
Thank you for the time. So this is a highly requested episode, and so what we're going to do in the interest of time is to jump right into the questions. So far, you have been at Fund and Grow for quite some time now, and you've seen all kinds of different scenarios, cases, and common mistakes that people have made. And we have been emphasizing over and over that sometimes it's great to do it yourself, but sometimes not so much, right? And so in your experience, can you share, let's say, 5 common mistakes that people usually do when they're pursuing business credit on their own, and how they can actually do things differently?
Yeah, absolutely. So I've been with the Fund and Grow for going on a decade now. In July, it'll be 10 years. So I've seen all different types of scenarios. We submit about 1,500 to 2,000 applications every month. So we're seeing all kinds of different scenarios, different credit profiles, different outcomes. And I got with our team to see what their perspective was on the 5 mistakes when applying for business credit. And here's what we have. So number 1 is applying with high credit card balances. So a lot of times people just want to go and apply and see what they can get and test the waters. And that's really not the way to go about it. It's much better to make the pay downs before you apply, because that's going to ensure that you get approved for an actual substantial amount, not just, 5 or 10,000. And if you're over like 35%, if you're 50, pushing 60, 70% debt to credit ratio, then you're really going to slow down and hinder the amount of funding that you can get approved for. So that's, something that we recommend to everybody that comes in. And sometimes people don't like to hear that, but it's the truth. And we want to let people know, what to do in order to qualify for the maximum amount possible. And paying down credit cards to 35% across the board is very much ideal, and something that we recommend everyone would do before applying. And the next mistake that we see a lot is just paying the minimum payments on their existing credit cards. So the banks can see that. They see your payment history. They see the trends and all that. So when you go and apply for new credit, if you're just paying a minimum monthly payment, then that's going to also slow down the amount that you can get approved for, because they see that you're not aggressively paying it down, what you've already got. So they're going to be a little more hesitant when approving you with a larger amount. So I'd say before you apply, make a big payment, get them paid down as much as you can, and try not to just do the minimum monthly payment. Try to get them paid down. Personally, that's what I do. I like to, I use my credit cards a lot. That's all I use because I like the rewards points and so much, free stuff and cash back travel. But at the same time, I'm paying them off every month because I see how much my profile and my scores will fluctuate when I use my personal credit, pay them down. I'm going from an 800 to like a 770. So pay off your balances if you can every month, especially if you have interest on those credit cards. That way, when you go and apply for zero interest business credit, you're going to get approved for way more, right? So that's the second one. The third one is negative credit remarks. So if you've got any late payments or charge-offs, unpaid charge-offs or collections or, bankruptcies, judgments, all those things, you want to get those resolved and repaired before you go and apply. Because if you apply with that, you're hindering the results you can get, and it's just going to slow you down in the long run. Your best bet is to get with a credit repair company and get those items removed and get your scores over 730 before you begin to apply. Previous negative banking relationships. So even when the report looks good, right, sometimes there's still stuff that's going on in the background. Let's say you had an account with Chase and you had $10,000 that you charged off with them. And this was, let's say it was 7-10 years ago, whatever. And it's not on your report right now. But you got to keep that in mind because the bank still has that history in their system. So if you have a previous negative banking relationship, like let's say with Chase, and you go and apply thinking that you're just going to get approved for a large amount, they're going to see that and they're going to, kind of bring that up, and then you're going to have to work around that. So that's something to keep in mind. If let's say you've only got a negative relationship with one bank, your best bet might be to focus on the other banks that are available. That way, you're going to get approved and actually get a substantial amount. Oh, the other one was if you're a new business, brand new business. Now, just to clear that up, you can be a brand new startup and still get approved, but it's about how you set up the entity. So we recommend using a sole proprietorship, especially if you're a newbie and let's say you've just been in real estate for a year to 2 years, you've done 1 or 2 flips, but you don't have an LLC yet. So in that case, your best bet when applying for business credit is to set up a sole proprietorship, get your tax ID. You can match the years of industry experience that you've got on the sole proprietorship when you set it up. And that way, when you apply, you're going to at least be able to show that you've got 1 or 2 years of industry experience, which is going to allow you to get approved without having to jump through as many hoops. If you apply with a brand new LLC, that's going to be a problem. So your best bet is to use a sole proprietorship and match the years of industry experience that you've got. So yeah, those are like some of the most common mistakes that we see our clients when they go and they try to do it on their own. That's a lot of the time, that's what's holding them back. Not to mention, another one is accepting the decision on the application. Right. That's another big no-no when it comes to applying for business credit, because a lot of times in the beginning, they just systematically will either deny your application based on something small that can be overturned, or they'll only give you, let's say, $25,000, $5,000, something like that. Not a large limit. And a lot of times that's because the computer's making that decision, the algorithm, and sometimes the algorithm's not accurate. It's not right. And it's not the end all be all. That's why we always make sure that we call in, we speak to the decision maker, the underwriter, the people that we're talking to every single day. Our team is incentivized. We pay them a commission based on the increases they can get for our clients. So we submit, like I said, 1,500 to 2,000 applications a month. So we really know what the bank's looking for and what they're not looking for. So when we apply for somebody, we pretty much know what they're supposed to be getting approved for. So for us, we're always able to get on the phone and say, hey, I know you guys, only approved us for 5,000, but that's really not enough based on the credit profile. I need you to manually review this, and we need to increase the limit because the client's not going to be happy with $5,000 when they've already got $20,000 in personal credit. So understanding what the bank's looking for and then being able to push when you can push is extremely important. So, those are some of the most common mistakes, and I just threw an extra one in there at the end, but that one's pretty important. And that's literally bringing in 70 to 80% more funding for our clients. So originally they might only be approved for $10,000, but once we do our negotiations process, After that, we're changing that to like $50,000, $60,000, and it varies based on credit reports. Obviously, someone with a 730 versus someone with an 800 is going to have a different result. But that is some of the common mistakes that we see pretty often.
Well, I'm actually blown away. Thank you so much for sharing such a great information. These are stuff that people normally wouldn't really think of. They think it's just a matter of like, oh, I just opened up my LLC, let me just go ahead and apply. And then they're wondering, well, why is it that I'm not getting approved for credit? Well, if it was that easy, then everybody will be obtaining business credit. That's why you have to leave it to the expert. And to your last bonus point, what you said, most people give up right away. And yes, like you mentioned, as soon as they see that application being denied, they just throw the towel and then that's it. That's why you have a team of experts. That's why you need to work with the expert in order for them to just jump in and make sure not only that you get approved, but also that you get access to the highest amount of liquid cash available so that you can continue to move on with your business or your real estate investment. So thank you once again for sharing that. That actually brings you to my next point, right? I know you and I have recorded a couple of interviews in the past, and here and there you get a couple of naysayers saying, well, it's just too good to be true. There's no such thing as taking my credit card. In fact, I've actually gone to the bank with my credit cards and the bank said no, that I cannot buy real estate. I mean, of course the bank is going to say no, because in their eyes, they are viewing you as using debt to acquire more debt, right? So in your experience, what kind of tips can you, I mean, if possible, share with everyone who's tuning in today in terms of creative use of that funds that you make available for them through Fund and Grow and their credit cards?
So I also do real estate deals. I've done some fix and flips, and I've wholesaled and all that good stuff. And I personally use the credit for my real estate deals. I've gone and interviewed countless clients. We just went a few weeks back, about an hour from the office, and visited one of our clients at his two duplexes that are side by side. And he used the credit to buy the land and fund the down payments. So, and then he was able to do a cash out refinance, and he's got it all completely under a mortgage now. But being able to pull the trigger quickly, buy the land. And then we have a lot of clients I've interviewed as well that buy properties outright using the credit, sending a wire from the credit account to the title company. You close just like a cash buyer would if the cash buyer is sending it from their bank account. The only difference is you're sending a wire from the credit card to the title company. And there's a service that allows you to do that we work with, and we have a liaison there. So our clients get like VIP treatment when they're looking to send a wire transfer, buying them outright, or they're using it to fund the land or fund the down payment or fund a rehab. Depends on the market you're in too. So if you go through the program and let's say you get, 50, 60,000, but you're in a market where properties are going for 30 to 40,000, you could buy the property outright. You know what I mean? But if you're in a market where you're buying houses for 200,000, then this would be a better fit for covering the renovations and all those different types of things like marketing. And the cool thing is that if you do buy a property outright or you put an expensive rehab on the cards, now you've just earned a ton of rewards points, because a lot of the cards that you get are going to have rewards points. So we have clients cashing in thousands of dollars every couple months because they're using so much credit. Like us, we spend about $100,000 a month in paid advertising. So we're getting a ton of free rewards points and cash back. Ari just went to Spain about a year ago or so.
Oh, nice.
First class. And it was probably like a $20,000, $30,000 trip for him and his family. Totally free because of all the rewards points that we've racked up. So there's a lot of benefits to it. The business credit doesn't show up on your personal credit report either. So if you do a flip, or if you buy a property and you're waiting to place a tenant, or you're waiting to flip it, because we have clients that are buying rentals all the time too. So this works for rentals. But the cool thing is it doesn't show up on your personal credit report. So if you've got a large chunk of a balance on there, it's no longer going to bring your personal scores down, because it's on the business credit profile, which reports to the tax ID, and it doesn't even show up on your personal credit report.
Excellent.
So the fluctuation is going to be minimized, and you're going to end up having a much easier time when you go and do a cash out refinance. If you're doing a rental property, you fix it up, you place a tenant, Now, when you do your cash out refinance, I've been told by countless clients, specifically when I've interviewed them, how much easier it is to refinance now that the debt's not showing on their personal report.
Right, right.
So a lot of benefits, a lot of ways to use it, especially in real estate. That's like the number one client that we've got. The majority of our clients are in real estate. And I just see so many people having so much success. One guy I interviewed named Maurice, he bought 6 of his very first investment properties, 6 of them, using the credit we got for him. He was in the program. He got over 200,000, and he's got 6 properties now. And before that, he's never owned a real estate investment before. So, and I've got so many that I could list off, but the bottom line is it's a great resource. It's going to cost a lot less than hard money. It's a great supplement to hard money too.
Yeah.
But you could do more deals if you've got access to business credit. You don't have to wait on the lender to approve your deal. And a lot of times they're not going to approve every deal unless there's a huge, a real substantial amount of meat on the bone. So, yeah, I'd say with real estate investing, it's probably one of the best fits, but also like Amazon businesses, any type of business. We have all types of clients from all different industries. So, I definitely see this as a better fit for real estate investors, which I know is most of your audience, but it works for anything.
Wow. You provided excellent examples, more than I could ever think of. So thank you so much for sharing that. And yes, as you saw, there are multiple creative ways to leveraging those credit card funds, not just for real estate, but also for business. So thank you very much for sharing. And that actually, you mentioned something about one of your customers and how he was able to leverage all of that money. Now I would like to move on to the topic of having a partner, right? When you get access to all of these funds, it's great. But if you bring in a partner on board, you can actually maximize those funds even more and have more money to do whatever is it that you feel like it, whether it's to build a new business or to just simply buy more real estate. Can you share a couple of anecdotes about clients of yours who were able to maximize everything to pretty much the next level?
Yeah. So being able to bring on the partners, it's huge. I mean, you can get double the amount of funding that way. So if you've got someone in your family, a spouse, business partner, anyone that you know who has good credit, then you should definitely bring them on with you into the program because we can get double the amount of funding. And what's cool is we don't charge an extra fee. So, we could charge, the fee twice, but we allow people to bring in a partner and we'll apply for both people. So that way you can get more funding. So let's say you have, dinged up credit right now. You got low scores. You don't really qualify right now. And so we need to do credit repair. We need to get some balances paid down, whatever it is. But if you have a partner or someone who's close to you that you can bring in who does qualify now, we can get funding through that partner. And then you can get your credit repaired and then come back and then we'll apply for you once your credit's repaired or once you've made your pay downs, whatever it is that's holding you back. The cool thing is you bring in that partner, we get funding right away. You both can utilize it. And then once your credit's repaired, or let's say both of you have great credit, then we just apply for both of you right away and we get double the amount of funding right away. And I've seen that help so many clients get access to more and be able to do more with their business. But at the same time, I've seen tons of clients that sign up just by themselves. A lot of the people that I've interviewed, might not have used a partner because they didn't have one available, but they still got really great results and they were still able to grow their business. Like one guy I'm thinking of, Nick, he didn't use a partner, but he got 300,000 on his own. He now went from doing 40,000 a month wholesaling. Now he's doing 400,000 a month. He told me that on the interview, and it's like amazing. He's like, dude, I'm so grateful for you guys. You guys have really helped me. I'm able to do 10 times more revenue now than I used to do. He used to spend a small amount on pay-per-click. Now he's spending the amount of money that he used to make per month on pay-per-click and advertising. So he's got a multi-million-dollar wholesaling business. And, hearing that from him about how grateful he was and how it helped him so much was pretty cool. And he didn't even use a partner. But I'm sure, I might actually have to remind him about that because he's probably got someone close to him that he could bring in and get more funding. He just hasn't done it yet. So definitely a huge option, great benefit to be able to bring a partner in at no additional cost. It's something that we kind of do and we're just kind of being, gracious about it. But at the same time, there's other companies out there that will not do that. They're going to charge you per person and that's it. So, if you have a partner, definitely bring them in. But if you don't, it's still obviously a great resource, a great funding avenue.
Excellent, excellent success story. Thank you so much for sharing. And speaking of success story, we actually have 2 additional guests for today's video that are here to share their experience with Fund and Grow and actually let you see how easy it is to delegate, to use the experts and reap all of the benefits where you're maximizing your time and having it all dedicated to your real estate investing portfolio or just simply expanding your business. So without further ado, let's just welcome our guest. So thank you very much for taking the time and joining Mike and I today. So let's just start off with you, Claudio. I know you had a very interesting experience in terms of applying for business credit, but then in the end, your wife, as your business partner, wound up getting a lot more credit than you did. So share a little bit about that with everyone who's watching you today.
All I can tell you, as I was telling basically before, this year, it's just been amazing. It's been a challenge. So many gracious stuff happening in our lives. And nothing. All I can tell you ever since I joined Fund and Grow, I didn't know what it was, to be honest. And I was so excited right at the beginning and all that. And I've been working out with this beautiful girl that has been helping me from there. Her name is Bianca. And nothing. Basically, we started, applying for business credit cards and all that. And I'm not going to lie to you, pretty much like a week later, whatever. As soon as we started applying, I started getting, those credit cards over here at home. And the funny thing, even though my credit score was amazing at that time, everything, I thought that I was ready for this pretty much. And actually, guess what? Out of the 4 credit cards that we applied for, I was able to get just 1 credit card approved, which I'm not going to lie to you, I wasn't too happy about it. I didn't know how the process was. So nothing. So nicely, I was told by this lady, Bianca, you know what, don't worry about it. Just relax. This is how it is. Every case is different, basically. And now we're going to give it a try in 2 weeks with your wife, and then let's see what happens. So nothing. Now, at that point, her credit score was like 720 around there. So me, as I was kidding around with her, I'm like, oh, forget it. It was just approved for 1 credit card. I don't know what's going to happen with yours. So we started laughing about it, kidding around. 2 weeks later, the process once again started and all that. And guess what? Oh yeah, she's always my angel. That's what I can tell you. She didn't get 1 credit card approved. She got 2 credit cards approved. One of them was for $2,000. The next one, which was $18,500, which you have no idea like how happy we were, and especially her making fun of me. And nothing. It's all about, you know what? You have to give it a try. You have to understand that the process isn't that easy, to be honest. But as you follow, everything that they've been telling you, for example, don't do this, don't do that, and just give us a chance to see what happens. And look at this, and I'm so happy. That's all I can tell you. I'm just so proud to be here.
Perfect. Thank you for sharing the story, Claudio. It is, in fact, not an easy thing to do on your own, especially if you don't have the experience. That's why we have the experts in Fund and Grow, right, Mike, for you to just dive in and assist everyone along the way. And it seems that Bianca did an excellent job. So please say thank you to Bianca on behalf of all of us.
Yeah, definitely. I definitely will. And what you just said is kind of a testament to what I was mentioning earlier about how the initial decision isn't always the actual decision. And it's important that, we follow up and we have the underwriter review it manually, because a lot of times the computer, the algorithm, it just automatically denies it. But really you are qualifying. So sometimes it's a matter of doing that review and doing the follow-up. And that's something that we do for a lot of our clients. And it brings in a lot more funding than the initial approval, which is usually not much if there's an approval at all. A lot of times they come back denied at first, and then we're able to get them overturned.
Right. So once again, thank you for the 2 of you for sharing the story. Now, to continue to piggyback on what you just shared, Mike. So you guys are the team of experts, and you get work done. And at the same time, you also educate the customers, because sometimes they might not have the perfect credit, or maybe they have good credit, but If they improve that a little bit more, then they can get access to even more credit. So with that, what I would like to ask is for Gladys to actually share her story with us on how Fund and Grow walked you kind of like throughout the entire process from beginning to end, and how you were actually able to use those funds to gain more equity in your existing property. So all yours, Gladys.
Hi, everyone. Hi, Mike. It has been a real amazing experience working with Fund and Grow. Why? Because just kind of to give you a small backstory is I was new to real estate investing, and it took me years to be able to come up with the money for a down payment on a property. And on my first purchase, I didn't lose everything, but I spent all of it. And using Fund and Grow, I was able within a matter of weeks, not only obtain money to help me increase my equity, but I also got 25% for the next down payment on another property, which it would have taken me years, especially with the collateral damage that I did to myself on my credit. And the representative who I'm working with is Nicole. She was able to walk me through what I needed to do and kind of do like an overall assessment on the things that I had to improve on my credit profile so that I could look and qualify for lenders. And that I said, it was really amazing because I had done so much damage to myself trying to improve my credit that instead of fixing my credit, I kind of ruined it more by applying for more credit cards. And I think I mentioned this to Lucelia. I now have 17 credit cards, but that meant 17 new inquiries on my credit profile. No business lender is going to come out and give me a business credit with that. And Fund and Grow was able to walk me, get those inquiries removed. I'm currently down to 8. And with that, I'm saying that I was able to look very credit friendly or worthy for getting that 25% down payment from the expansion of my portfolio, which I wouldn't have been able to do on my own.
Nice. That's awesome. That's great to hear. So have you already used the credit for the down payment, or is that still in process?
That's still in process.
Okay.
The other thing that I also loved, not only did I get the 25%, but I got it at 0%.
Exactly. Yeah, like you can't beat that.
0%. Can't beat that. Free money. Every investor knows you use other people's money to keep growing. Mm-hmm. And I would have taken me, like I said before, it would have taken me years to build 25% down payment. And I did it in a matter of weeks with Fund and Grow. And if I would have done this, trying to do it on my own, I would have never gotten it because I didn't know what to look for or what the businesses lenders are looking for when they're reviewing a credit profile, which is something that I've talked to other students before, is there are many factors when what lenders are looking for that we don't know exactly. We think we know, we hear it, we see it on other YouTube channels, but it's not. You have to leave what I call SMEs, the subject matter experts, do the work for you. Do it right. Let them do it for you. Every smart investor knows that you go out there and you go for the resources. You don't do the work yourself because we aren't the experts. And what we end up doing is creating collateral damage to ourselves, which can take time to fix and repair.
Absolutely. I couldn't agree with you more. And you got to focus on what's making the money, right? What's bringing in the most money. You don't want to go and learn all these different things. Like, for example, when you do a real estate deal, you don't want to learn how to do the closing paperwork. You're going to pay the title company to do that.
Absolutely.
You know? But there is like I've dealt with one investor who wanted to do their own closing paperwork. But for the most part, everyone wants to hire experts. Everyone wants to hire the painter, the guy that's going to do the flooring. And because, he's going to do it the best. He's the most confident with it. And it's going to be done as quickly as possible. You know what I mean? So it's like, it's kind of a no-brainer when it comes to getting access to funding. Why walk uphill with a broken leg, so to speak, when you kind of just don't really know for sure what you qualify for or what to say or how to get it reviewed. And for us, it's like, we know exactly what it is, what the criteria is, how to qualify. So you end up getting the results a lot more quickly with us versus, getting the small amounts and a much slower pace if you're trying to do it yourself. And I've had a lot of clients tell me that they've tried to do it themselves with like 750 credit scores and they got denied. And they're like, I don't know why I got denied. I have good credit. Because sometimes the bank will tell you, we can't approve you with business credit because you have no previous business credit history, which makes it really hard to ever get business credit if you're being told you can't have any business credit because you have no previous business credit history. So we know that that's not really a final answer. We know that the personal credit is the qualifier. And so when we hear that remark of you don't have any business credit history, we say, look, this is a personal credit based application. Can we please review the personal credit report so that we can get our client approved with a substantial amount because they qualify based on their personal credit? Because that's how it is. Like it's a personal credit check. That's the main thing. But sometimes the bank will kind of push back. And they don't always make it that easy to get approved for these zero interest business credit accounts. So it's pretty important to work with a company like us because we know how to submit the applications at the exact same time so that we know all of them will get approved, or we have a much higher chance of getting all of them approved because they're simultaneously being applied for at the same time. And then we're following up, we're putting them in a review. So I'm glad to hear that, things are going good with you guys. I really do appreciate being able to connect with clients like this. So thank you guys again for joining us. This is cool.
Yeah, and there's nothing else for me to say. You guys managed to capture pretty much everything that I will think that the audience will probably want to hear. You'll probably answer most of their questions with your anecdotes, and you, Mike, as well, with your teachings, which that actually takes me to the very first question. You sort of like did a quick short recap on that, but the most common mistakes, right? So we share with the audience what they are, and now I would like to hear the experience from either Claudio or Gladys as to what were the mistakes that you were actually doing before, and thankfully, because you're working with Fund and Grow, you managed to correct those through their guidance and by working with them along the way.
I had made a mistake thinking when someone is looking at the utilization of 35% utilization, I'm thinking that it's the whole pie. All my cards combined 35%. And actually, I learned through Fund and Grow, that is not the case. It is not your whole profile. It is each account, 35% of each account. And I had transferred because I was using and trying to leverage 0%. I shoved all my debt to one card, maximizing it to 100% utilization. And she was like, no, this is not how we do this. Let's fix this because it's not going to look good. So I was able to dismantle that somehow, some way, and I was able to then qualify. But that was my biggest mistake, was actually trying to leverage that 0% and just shoving all my debt to that one card. I had received a personal credit card of like $11,000. So of course I'm going to want to take advantage of it, which was 18 months of 0% interest for 18 months. It's tempting. Not if you're trying to expand into the business credit profile. Like if you want to obtain business credit, that doesn't look good.
Right. Thank you, Gladys. And just to quickly clarify the anecdote that Gladys shared, because I can see that could create some confusion with some of the students at NOVARISE. Just like with real estate and investing in general, there are different strategies for anything that you're trying to do. And that's what the beauty is, right? Everything is so versatile. I know that I have mentioned in the past that whenever you're applying for credit or where you're working on your DTI, your debt to income ratio, that lenders typically look at the overall credit usage as opposed to each individual credit card. But in this case in particular, working with Fund and Grow and trying to get access to business credit, the scenario changes a little bit. Just like your example earlier, Mike, about using a sole proprietorship versus an LLC when you're trying to build business credit faster. It's not that one entity is better or easier to use than the other. It's just that they all have different uses depending on what you're looking to get. And so with that, I wanted to make a quick pause and just move on to Claudio so that way he can share his story as well. And then we'll just jump into the next thing.
Well, I can tell you one of the biggest mistakes that I used to make before, and I didn't know anything about it. At one point, I had like about 7, 8 credit cards. And especially those credit cards that I'm talking about from like 7, 8 years ago. And just because I wasn't using them, for some reason, I was like, you know what? I don't need those credit cards right now. I'm just going to keep it as it is. And then at one point, before starting with Fund and Grow, what I did, the biggest mistake, I called the company, the bank, and I canceled them. I canceled those credit cards, which I didn't know anything about this, to be honest. So when I was talking to Bianca about what I did, she goes like, what did you just do? Pretty much all my credit history from those accounts that they were really good just disappears. It just disappears. I know, and I didn't know anything about it. That's what I'm telling you. Ever since I started with you guys, I've been learning, for example, you have your credit cards, especially those at 0%. I've been using them a lot, but at the same time, I've been paying on time. If I use, for example, the credit card that I had for, that we still have, of course, is 18 months, 0%. Thank you, guys. I've been using that credit card already almost 2 times. I'm not kidding. It's just like, but at the same time, I make really nice payments on time and all that. That credit card is right now down to $3,000, basically. And I'm planning to use it once again towards other stuff. And like, for example, real estate, as our teacher is telling us and all this, I've been paying, for example, towards the principal, a nice amount of money. Not only that, I've been making payments ahead. So why? So this way I can save the cash that I would use to pay them, directly from my checking account. And nothing, I can use that, for something else. But I know that it's a lot of mistakes that we make when you don't know anything about this. Another mistake that I was making, actually applying to, for example, like mortgage, auto loan, or all this crazy stuff. And it was taking me too long, actually, to decide which one to go to. And I didn't know that actually this is something bad. If you're going to do something like this, it has to be in a short time, like in 30 days or so, because if not, this all going to appear on your credit report. Mm-hmm. And I know that's how you learn sometimes.
I got a question for you. Did you close those accounts down before we applied?
Before I apply with you guys. I know. I didn't know anything about it, to be honest.
We'll get them all back. We'll get you more on the business credit side. So we'll make up for that for you. But that could have been partially what hindered some
I know.
At the beginning.
I was told about it too, but you know what? I'm so happy to be with you. And actually, I believe in a couple of weeks, I'm going to start working with Bianca once again. And yeah, I'm just excited. I know that this is going to work for us. And thank you guys, really.
Yeah, we'll definitely get you on for another round of funding soon.
All right, so thank you everybody for sharing your anecdote. This is excellent information. And thank you as well, Mike, for educating all of us today. We'll definitely learned a lot from you, and now people know exactly what not to do anymore, whether they choose to work with you or not, although I couldn't think of any reasons why they wouldn't want to work with you, given the amazing testimonials that we just heard today. Is there anything else you would like to share with the audience today?
One thing I would say is if you guys are interested in learning more, you should go to the link, get on a phone call with our team. There's a huge discount available to you guys if you go through Lucilia's link. So definitely do that. We'll get on a call, do a little strategy session. We'll pre-qualify you, see where you stand, and let you know kind of what to expect from the program. And if you want to do it, then that's up to you. But one thing to keep in mind is it's a 12-month membership that we offer, and it's a done-for-you service. We do all the work. You don't do anything. You just fill out the information for us, and then we go and apply, and we follow up. We make sure you get approved at the maximum amount possible. We have a team of over 50 employees here in Florida, and they're doing all the work for our clients. And we found it so much better that way. Instead of trying to tell the client to call and do this, do that, the results aren't going to be there because our clients, just like so many of you on the call, just like Gladys and Claudio, you guys are busy. You're trying to, create income. You're trying to get your investments going. And a lot of times some people are also working a 9 to 5, and so it's a lot of work. So we know we have to do it in-house, and we have incentivized our team based on the amount they get our clients approved for. And so it's like a science for us. We've got it figured out. We submit about 1,500 to 2,000 applications a month, and we really know what it takes. We're getting approvals of $10 to $15 million total every month for our clients. And so I definitely recommend go to the link, get on a phone call, at least get the information from one of our business development experts. They'll explain the process more in detail. They'll tell you about your credit. They'll give you suggestions. They'll tell you if you need to make a pay down, what cards to pay down. And like Gladys brought up earlier, it's important to pay the right cards down and keep it balanced across all accounts at 35%. That's how you'll get approved at the maximum amount possible. So we do have a really big discount. It's a $500 discount if you guys go to the link, get on a call with someone from our team. And just so you know, you're in good hands. I mean, obviously you've heard from our 2 clients on the call right now, but if you look us up, we've got over 2,300 positive reviews with a 4.9 star rating. Absolutely unheard of to have that type of reputation. But the fact is, we care. We take care of our clients. We have integrity. We want to deliver on what we say. So we set expectations right. And we really do follow up and take care of our clients. We communicate. We answer the phones when clients are calling in. And we try to keep our clients, fully up to date with what's going on. And that's how I feel. I want to do good business. I want to have a good reputation. And that's important to me. There's other companies out there. They don't care about their reputation. They don't care if they've got complaints or negative reviews. We really care. So we resolve things with our clients. And I just wanted to say that because I wanted people to know that you're in good hands. I've been with the company for 10 years. We're growing. We just moved into a brand new office building, and we're now planning to build another office building on that, in that same piece of land, because we're getting close to filling this new office already. We're continuously hiring new people, growing the team. So you're in great hands. And I thank you, Lucilia. Thank you, Gladys and Claudio, for sharing your experience with Fund and Grow. And if you're on the fence or if you're looking for more information, go to the link, and we'd love to speak with you guys soon.
So, wow, this was amazing. A great interview. Claudio, Gladys, thank you so much for your time, especially you, Mike. Thank you for the great info session. We definitely learned a lot. And like Mike mentioned, do not forget to pay a visit to this link right here down below on the screen so you can get in touch with Mike's teams and also enjoy the amazing discount that we have worked out for you. Without anything else to say, hopefully you learned a lot from today's episode, and Mike's team will be expecting you. Take care. Bye-bye.